Evening, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the August 31st stock market wrap-up for you to use on the September 1st session. First off, let's start off with the New York Stock Exchange today. Well, actually, let's do something else. Let's go back to China last night. As I put in my video 2 that I made last night because we were just so busy this weekend with activities, good surf and bad sunburn. But last night, China broke down below these levels. And as you can see, it was kind of making a little, as it always makes, another pennant formation, just like it was doing back here. And then it broke down out of this ascending one. It was ascending, though. That little ascending base there. New highs in China, relative strength hints lower. Here's your big sell day. And then here's your real get out of everything day. And since then, you were down 8%. But still, a lot of people thought maybe support could hold. Maybe China could rally. Even I thought that. And I thought if China would hold the support and rally from here, that would be an excellent tell for our markets. However, last night, boom, crash. China hit a mini crash because basically in 2 days it's down 10%. I'm going to call that a crash. And from the highs that it just set earlier in August, it's now down 23%. That's a lot. That's a big drop in a short amount of time. And that can be shown here on this arithmetic chart. When if you go back to 2007, you see you're still well off the highs there. But just recently, compare the drop to the uptrend. That's why I just was always a little nervous about going long after June, anything in size, which has been the correct play. And for those of you out there, which I love Investors Business Daily, IBD is one of my favorite all-time publications and producers of stock market information ever. However, guys, you got to learn. When the CanSlim charts aren't there, they're not there. When the perfect charts aren't there, they're not there. This is the first rally of this long duration where I got 0 perfect setups. That is a bounce off the 50-day moving average and a breakout above some sort of resistance. Either a cup base, cup with handle, flat base on flat base. I don't care what it is. But whatever it is, it has to be a bounce off the 50-day moving average and a breakout. Also, it needs to close either at the high of the day or very near. 2, 3, 4 cents off, 5 cents if it's a big range. Also, the 50-day moving average has to be above the 200-day moving average, and the price needs to be very close to the 50-day moving average. Now, that's just the price objective. The next thing is that in the volume, when that pullback was happening or when the base was being made, volume needs to be short in it. Let's look at one that's working recently that I'm accidentally now giving it away as a long. But anyway, we went long this stock 1, 2, 3, 4, 5, 6 days ago, and we now have about a 16% gain. And one thing is here is that a lot of people thought that, oh, this is almost perfect, but there's a problem. We've got the one, okay, we see the high day is 525. We see 521 is where it's close. Obviously, here on this daily chart, it looks like close to the high day. So obviously, we got that down. However, it's not right off the 50-day moving average, but it also clears this area of breaking above a resistance level. Connect those two recent highs, and there you got the breakout above the little resistance level that it was drawing there. And whenever it does that, it has max green bop. But now what I want is max green bop in the entire base. I don't want max green bop to drop for 2 days, for 1 day. I want it to be max green the entire way. One of the last ones that worked that was like that was Rhino. Look at the base in July. Perfect. The only problem is it was short, hence only the 70% rally. But as you can tell, max green bop had the heavy volume, big tall green bars, little red bars in the middle, and the price, once again, off the 50-day moving average, so it didn't pass it. But NVAX is very similar. Do you notice on the pullback in August, the very quiet low volume? Notice the 1, 2, 3 big tall green bars that are in there. And notice on the previous uptrend, the very strong volume on the uptrend. And notice that before it even started the base, the little area between here and July and August, the low volume. So since it started moving June, you've got big tall green bars everywhere. Little bitty red bars everywhere except for a few days, and even on those up days, you got a tail here. You don't really have a tail there. That's a bad day. That would be considered a bad day. But this can be considered, well, at least it closed off the low. So even though that if we discount the first 3, if we just look at the action from mid-July on, every big bar has been a bullish bar, even the red ones, the 2 that are above the yellow line there. But if the max green bop would have been there, the price would have been coming off the 50-day moving average, a high day close, with this exact volume setup with the max green bop. Oh, yeah, we would have gotten this as a very large position. However, guys, There's nothing wrong with putting only 5% of your account into one stock, getting a 100% return, thus returning yourself 5% on your total portfolio. You get 4 to 5 of those, you're starting to get a 20 to 25 to 30% return. And guess what? Annually, that's pretty darn good in a market like this where CanSlim stocks clearly aren't leading. Now, really quickly, after I showed you China, I want to show you the breakdown again, see how ugly this is. This is very ugly. The one thing you can't see here, though, is volume. Volume is very low on this breakdown, and that's very, very good. But whenever you're breaking down like this, that ain't much of a comfort. Ask anybody if they bought here in June, like right here on this breakout. Tell them that, hey, the pullback from whenever you were up 27% that is now turned into a big, huge gain of negative 2%. Tell them that the downtrend's been on low volume. Tell me how they took that. So it doesn't matter if this downtrend's on low volume or high volume. This is horrible, which is why I expected a pullback today. However, I didn't expect us to close this strong. And I tell you what, with the NASDAQ down less than 1%, having that kind of a big intraday move, look at that. Look at how far off the lows we came. We didn't even bust down to new lows below the lows on Thursday. We held the 1993 lows by hitting 1997 only. That was a beautiful reversal. NYSE got lower volume on the day, too, on the pullback. Shows higher volume, but on some indexes, I see lower volume. So I'm going to check another index right after this. The S&P 500, look at the tail on that one also. Nothing, obviously, as nice as the NASDAQ, but look at the Dow Jones Industrial Average. Look at how big it was down today. Only 0.5%. Not bad at all. Once again, another nice tail in that daily action. So since the July lows, even though volume hasn't been there, price has been, and that's what's been ultimately been the determinant in this rally. And you see there on the NASDAQ. Right here, look at that. Now, at least we have a little bit of volume with that. See the big, tall green bars coming up here. And then, of course, don't forget, we had that Rhino there. We have NVAX now, pretty charts. Not perfect, so really, it's impossible for me to put 25% or more of my portfolio in a stock that isn't perfect. Look at the average volume. Obviously, it has enough. It has enough to do something. Even on its low-volume days, it averages 200,000 shares in NVAX. Now, could I have done that in Rhino? Absolutely not. Probably not, because even though it averages 300,000 now, I want to show you back then. Here's an average day, right around 36,000. Jumps up to about, I'd say, 67,000. You can't load up on something like that. Just make it as big as you can with the limit orders. I got great limit fills. Now, of course, you got to be watching it right here as it holds on the 50-day moving average if you're still long, heavy Rhino. If you are, I don't know why. This little reversal and all this red volume and BOP should be worrying you a lot. But anyway. So I'm very happy with the indexes today. I'm ecstatic, actually, after the session that we saw in China. So I believe I'm making myself clear. It's the POO stocks that are working, and the POO stocks will keep trading. And if you load up on any POO stocks, you're a darn fool, because there are going to be some that give us hits. But where we have hits, we're going to have 3 winners for every loser. So as long as you cut that loser short and our winners at least match out like they did yesterday on our losers with some of the winners, and then we had the big winners like PXLW and OGXI, it all works out. It's just math. And money management, the selling discipline, all takes time to learn. Now, we still have time, so at the end of this, if you're still with me, I'm going to go ahead now and show you this. Now, for all you IBD subscribers that are in love with your CanSlim stocks and can't seem to get rid of them when clearly everything is telling you to not go long those stocks, look at the relative strength line. It busted down to a new low in April right after the March rally gets started on the IBD 85.85, and then there it is in July busting down to new lows, and then again in August busting down to new lows, and now again today it's busting down to new lows. Guys, I don't know how many times I got to tell you this. CanSlim stocks aren't leading. I don't have any great setups. Star and ARST should have given me 200% returns by now, or 50% to 200% returns, 100 to 400% returns on margin. And they were going to be very large. They both amounted to almost to 20% of my portfolio alone. However, both did not act right, left both with small gains. Worked out pretty well for me. So, not great, but at least it weren't losses. So, things are still working well, but obviously they're not working well for canned slim stocks. You're going to have to trade the poo stocks, and you're a dang fool if you load up on any of these $1.50, $2, $2.50 stocks that have losses burning all around that just came from 90% downtrends in 2008. Seriously, you've got problems. And if you're doing it, making money in it, you got cojones. And then if you keep the money, you actually have some brains. How many of you guys that went fully long AIG last month and now have a 200% gain or whatever it is? Here, let me look on my other computer. Let me go look at this one, AIG. Yeah, let's say that you got it on the July lows and now you're all yipping and yapping because you've now got a huge 378% gain. I'd like to know, see if you're going to sell here at the top of this price move possibly before it goes back into consolidation. And I'd also like to know exactly how you bought the low. So very few bought that. And also, how many times did you get burned in 2008 before you went long? So you just got to be careful with the people that tell you that one way works all the time. It clearly doesn't, because if you were sticking to can slim only stocks, just one quick glance at the relative strength line from the November